Banking seems so simple, right? Swipe your card, tap your phone, maybe visit an ATM. But behind that simplicity, small mistakes can end up costing you big time. We're talking about hidden fees, missed savings, and even security risks. So today, we're diving into the ultimate guide to banking do's and don'ts. By the end of this video, you'll know exactly how to make your money work for you, not against you. Let's get started. First up, a huge do. Track your spending. It sounds obvious, but you'd be surprised how many people don't really know where their money is going. Your bank's mobile app is your best friend here. Most of them categorize your purchases automatically, showing you exactly how much you spent on food, entertainment, or shopping. If your bank's app isn't great, there are tons of free budgeting apps out there. The goal is to get a clear picture of your cash flow. Remember those small $5 coffee purchases or that $10 subscription you forgot about? They add up incredibly fast. Tracking everything helps you stay in control and make conscious decisions about your spending, instead of wondering where your paycheck went at the end of the month. Now for our first don't, and this one is a classic pitfall. Don't overdraft your account. Overdrafting means spending more money than you actually have. When this happens, your bank might cover the transaction for you, but they'll charge you a hefty overdraft fee for the convenience. These fees can be $35 or more for each transaction. Imagine buying a $5 sandwich and getting hit with a $35 fee on top of it. That's a $40 sandwich. These fees can pile up quickly, digging you into a hole that's hard to get out of. A simple tip to avoid this is to set up low balance alerts through your banking app. Your bank can send you a text or an email when your balance drops below a certain amount, say $50. This little reminder can save you a lot of money and stress. Alright, let's move on to a proactive do. Set up automatic savings. This is probably the single most effective way to build your savings without even thinking about it. Here is how it works. You instruct your bank to automatically transfer a specific amount of money from your checking account to your savings account on a regular schedule. You could do it every payday, once a week, or once a month. Even if you start small, say $25 per paycheck, it makes a huge difference over time. This pay-yourself-first strategy helps you build an emergency fund for unexpected expenses. Save for a big goal like a vacation or a down payment, or just create a financial safety net. It's a powerful habit because it removes the temptation to spend that money. It's out of sight, out of mind, and quietly growing in your savings account. Next, a critical security. Don't. Never, ever share your account details. I'm talking about your PIN for your debit card, your online banking password, or the answers to your security questions. Scammers are getting more and more sophisticated. They might send you an email or a text message that looks like it's from your bank, asking you to verify your information by clicking a link. They might even call you, pretending to be from the fraud department. Here's the golden rule. Your bank will never ask you for your password or full PIN over the phone, in an email, or via text. If you get a message like this, it's a scam. Don't click the link, don't reply, and don't give them any information. If you're concerned, hang up and call the official number on the back of your bank card, or on your bank's website to verify if there's a real issue. Your security is your responsibility. Back to the DOs. Do reconcile your account regularly. This just means taking a few minutes each week or month to review your bank statements and transactions. You're looking for two things: errors and unauthorized charges. Did that restaurant charge you twice? Is there a subscription fee for something you canceled months ago? Or worse, are there purchases you don't recognize at all? Catching these things early is key. Most banks have a limited window for you to dispute a fraudulent charge, often 60 days. So don't just let those bank statements pile up unopened. Log into your app or website, scroll through your recent activity, and make sure everything matches your own records. It's a simple checkup that can protect you from losing money to fraud or simple mistakes. Which brings us to our next don't. Don't ignore bank notifications. We just talked about setting up low balance alerts, but your bank sends out other important notifications too. They might alert you to a potentially fraudulent transaction, a new fee being introduced, or changes to your account terms. It's easy to see these emails or push notifications and just swipe them away, thinking you'll look at them later. But ignoring them can lead to bigger problems. An ignored fraud alert could mean a scammer is actively using your account. An ignored fee notification could mean you start getting charged for something that used to be free. These alerts are designed to help you and keep you informed. Pay attention to them. They are your bank's way of communicating important information directly to you. Here's a do that many people are afraid to follow. Ask questions. Your bank is a business, and you are the customer. The people who work there, whether at a branch or in a call center, are there to help you. Before you open an account, sign up for a service, or take out a loan, make sure you understand everything. Ask about monthly maintenance fees and how to waive them. Ask about the interest rate on a savings account. Ask what the overdraft protection options are. There are no stupid questions when it comes to your money. It is far better to ask for clarification up front than to be surprised by a fee or a term you didn't understand later on. A good banker will be happy to explain everything clearly. And our final don't open too many accounts. It can be tempting to open a new account every time a bank offers a sign-up bonus. But having too many accounts can be counterproductive. First, it can make it much harder to track your money. Juggling balances and transfers between multiple accounts can get confusing fast. Second, many accounts come with minimum balance requirements or monthly fees if you don't meet them. Spreading your money too thin might mean you end up paying fees on several accounts. For most people, a primary checking account, a primary savings account for your emergency fund, and maybe one or two additional savings accounts for specific goals is plenty. Keep it simple and stick to the accounts you actually need and use. So there you have it, the essential do's and don'ts of banking. It all comes down to a few simple principles. Be aware of where your money is going, be proactive about saving, and be alert to protect your security. When you follow these rules, you put yourself in the driver's seat. Your bank becomes a powerful tool that helps you achieve your financial goals, not a source of stress and fees. Thanks so much for watching. If you found these tips helpful, please hit that like button and subscribe for more content to help you master your money. I've got a question for you. Which banking tip are you going to start using today? Let me know in the comments below. And be sure to tune in for our next video, where we'll tackle credit cards 101, how to use them without getting into debt. See you then.